Hello, it's Guy Costin, and I'm so excited to introduce you to Dakota Live Podcast. If you love Dakota Live and our allocator interviews, you're going to love the Dakota Live Podcast. It's hosted by Robert Moyer, one of our investment sales professionals, and the allocator. And just like on Dakota Live, in those interviews, we ask them all the pertinent questions about themselves, their platform, their searches, go really, really deep so you can get a deep understanding of who they are, what they do, and their platform. If you haven't had a chance to get caught up on Dakota Live Podcast, now's your chance to do so. You can do it right now on Dakota Marketplace, Spotify, or iTunes. You're going to love them. Welcome to Dakota Studios, the premier location for all of your video production needs. Our studio is located in the heart of Center City, making it easily accessible for companies of all sizes. Our professional production team is dedicated to creating high-quality videos that showcase your products and services in the best possible light. We understand the importance of video in today's digital age and are here to help you take your business to the next level. Whether you need a video for your website, social media, or to showcase at an event, we have the expertise and equipment to bring your vision to life. Don't miss out on the opportunity to showcase your brand and products in a dynamic and engaging way. Contact us today to schedule a tour of our studio and discuss your next project. We can't wait to work with you and help you take your business to the next level. Hello everyone, it's Guy Costin, founder, CEO of Dakota. Welcome to the 15th episode of the Emerging Manager Growth Show. I'm joined by my colleague, Tim Dolan. Tim, welcome.
Thank you, Guy. Glad to be here.
Yeah, thanks for being here. So I think as many of you know, I want to give, for those of you who might not know us, so Dakota, we were founded in 2006, and we have been an outsourced sales and marketing firm for boutique investment firms. What that translates into basically emerging managers. Anywhere between 500 million and 3 billion when they start. We start with young mutual funds, and we've applied a very specific way of working that we turned into kind of in 2010, 2011 called the Dakota Way. And we get a lot of requests, Tim. A lot of different emerging managers call us. We've raised 25 billion since 2006. We've applied a very dedicated sales process, and it's always the same. We've always tried to complicate it. I wish there were some shortcuts or easier ways to do it, but we've learned in 15 years there's really what we believe is kind of one way to do it and raise money. And so we get so many requests, and based upon the fact that in 2019 we decided to take our database internally, turn it into a product externally, and now we have over 880 investment firms, 3,600 fundraisers. We use the data every single day. I say all this just because I want to establish a little credibility to kind of see, why are these guys doing this? Why would they do a show like this? Well, one of the reasons is there's a lot of myths, Tim. Mm-hmm. There's a lot of myths. And I kind of want to unpack this a little bit because we work with so many different firms and they ask us for advice. And you just want to just kind of get at that a little bit, unpack what that's all about and what people's belief systems actually are around fundraising versus the reality.
Yeah, and I think one of the important notes that we can touch to is a recent example with our partners at Spruce, right? This is a firm that's been around for over 10 years, has not fundraised historically in the past, and we took a strategy that had effectively no track record and no brand in the marketplace, right? And that's an emerging manager, right? Even though they have a long track record investing for quite some time, the market has no clue who they are, right? So us as a firm, we had to figure out, right, who are the correct buyers, so creating your TAM, right, who invests in private real estate and private LPs, right, and go through that entire process. And we were fortunate enough to raise about 25, 30 million pretty quickly, but we also opened up many new relationships across RIAs, family offices, direct institutions on behalf of this product. So again, going back to, right, you never know who's going to be a buyer of your strategy. This is a good example of Spruce. Even though they were relatively new, we had small RIAs that were looking to allocate. So,
listen, we know that fundraising's hard. And Tim, maybe could you just talk a little bit about the shortcut concept?
Yeah.
Right? And I mean this in all sincerity, because if you're listening today, you want to grow your firm, okay? You're on this show because you want to take some nuggets away, and we want to give it to you as clean as we can. But there are no shortcuts. You want to talk about that? Because I think everything we're going to cover here today is around a theme that we call do more with less. And it's very, very possible. We live it every single day. We're always working with boutique firms. We don't have an advertising budget. We don't have a PR budget. We have a 7-person team. We're lean and mean. But what we do is what I consider to be all the right things to give yourself the best chance to raise money.
Yeah, and we take the philosophy that investments are sold, not bought. And that is crucial for an emerging manager as well. You have to be out there calling on the buyers of your product, right? There are, as you say, there are no shortcuts, right? So it's a very defined sales process, whether you're selling a mutual fund to the RAs and the BDs and banks or private alternatives to family offices and institutions, right? You just need that consistent approach and process of being in front of those buyers, right? I guess one minor shortcut we could have is city scheduling, even though it's not a shortcut at all, right? It's a way to cover accounts within a specific metro area. Whether or not you go actually travel to go see them, it really doesn't matter. It's a management tool to cover those accounts on a consistent basis and reaching out and getting your brand in the marketplace. It will take time, right? Yeah. Admittedly, it does take time, anywhere from 6 months to, in some instances, 3 years. But as long as you have that consistent approach, right? Yeah.
Just accept the fact that fundraising is a grind, sales is a grind, there's tons of competition, everybody wants to be in this business. But if you follow what we would consider to be our protocols and our sales process, you do get results. Yeah. And at the end of this show, so we're going to spend about the next 10 minutes, 12 minutes talking about a particular segment. So each show that we do, we talk about a particular segment, whether it's state pension funds, whether it's RIAs, or in the case of today, we're going to talk about consultants. And Tim's going to go through the 3 categories of consultants, and they're always looking, they all have emerging manager programs, and we're going to unpack those for you. So when we conclude the call, we're going to go through a number of tips and techniques that we apply every single day that we have proven to work. And they aren't expensive, okay, but they're great leverage points, and they truly work. And we have seen, Tim, the real winners who follow our philosophy, because we've applied it now to an investment business as well as a software business, all on the front end, getting out, sending emails, booking meetings, doing the pedestrian work, right, which is the grind, and then getting in those meetings and bringing the stories to life. So with that, and this would be, dovetails in perfectly with when you do approach a consultant. But why don't we just start, Tim, and why don't you just give us, probably everybody on this call knows what a consultant is, but maybe just briefly give us a definition.
Yeah, so just a brief definition of the consultants. We're going to break this down into 3 groups, but just high level speaking, right? Making investment allocation decisions on behalf of another pool of capital, whether it's a foundation, endowment, public pension plan. We see the RA space becoming a growing practice for consultants. But for the purposes of today, right, organizing the groups, whether it's emerging manager consultants, the global or national consultants, think of like a Mercer or Willis Towers Watson, and then also, which is a massively growing segment, is the OCIO groups. So just getting in first to the emerging manager consultants, these are a must cover for any emerging manager program, as well as any majority women, minority owned business or diversity, equity, inclusion. Covering these key accounts early days when you're small and new is crucial because they can ramp up in terms of assets very quickly.
So give us expectations in terms of getting a win in these situations, because it's a little bit of R&D, right? But you can't not do it.
Yeah, absolutely. That's for the larger consultants, definitely R&D, right? Like getting in front of them, getting on their approved list or the recommended list, uploading their database is table stakes. Right, Mercer and Cowen and LCG, right? That's the easy work. Just get in their database. It does take some time, but you get in there and then reach out for a meeting.
Now we will. By the way, we have call notes we'll send out All this information is inside of Dakota Marketplace, our fundraising database. So with all this level of detail, but just want to make sure that you know, because we are covering a lot, but we'll send out the post-call notes after this call. But all the information is in Dakota Marketplace.
Yeah, and specific to the emerging manager consultants, a few examples. We've got Exponence, Addix, Legato, Bivium, Leading Edge, all great emerging manager firms. We've heard from Adam Chopin at Exponence and how they allocate to equity and fixed income managers.
But these are firms that, Tim, only do emerging managers.
Only do emerging managers.
So it's not like Mercer, where Mercer has a bigger practice just beyond having an emerging manager program. These guys are just dedicated to emerging managers.
Dedicated. So this is...
And just like anything else, in your fundraising, the goal is just to make sure your target allocators that invest in your type of strategy, that they know who you are, they know what you do. That's the goal, that you're out there, right? And hopefully you can do that face to face.
Yeah, and it's almost, as Adam said at Exponence, is just tell me you exist, right? Reach out and just say, hi, we have a new strategy or a new firm. We exist. This is who we are. And the great thing is these emerging manager programs, if you are new or getting just started, is they will help consult in terms of finding outsourced compliance and back office and legal and trading operations, right? So they want you to grow. They want to help you grow, and they work with that as well. So just keep that in mind. The other key considerations with these emerging manager consultants, though, is fees. Just be expected to have a massive negotiation around fees, because these allocations are by no means small.
Right.
We're talking anywhere from 50 to 500, sometimes even $1 billion allocation from some of their clients, which are largely pension plans. And at that, right, you might warrant a 1% fee for your strategy, but they could come at you at 10, 15 basis points for a sizable mandate. So just be aware of that. And then also being flexible on vehicles. If you have a strategy that can port well into an SMA or an ETF or a mutual fund or model delivery, or if you can do a customized separate account, that does make it a little bit more flexible for these programs.
I will throw out a little curveball there, Tim. I would say, don't forget to call the mutual fund sub-advisors like a Vanguard, who will put you in business if they like your strategy. So you could be a manager that came out of a bigger firm, you're starting your own firm, they'll seed you a very low fee, but it'll give you the AUM to then go attract additional assets.
Yeah, we should actually do that on a future show, because you've got Edward Jones, you've got Transamerica, right?
Yeah, they're looking for great managers.
Mutual fund sub-advisory is a good call.
So now are you going to dovetail into what's the next category?
Yeah, so the next category is, to your point, that R&D, the must cover, but it will take time. And those are those larger consultants, right? So really think about these large consultants: Makita, Willis Towers Watson, Stepstone, more on the real estate side, Mercer, Russell Investments, BlackRock, RVK, right? These are names that we're all familiar with, that they invest on behalf of massive amounts of capital across all channels, including the RIA space, but they also have a specific emerging manager program, right? So I'm looking Makita as a database, Mercer, Russell, BlackRock, RVK, LCG, right? These are Callan. These are all databases. You need to input your data day one.
Right.
And again, hey, we exist. Just get on their radar, right? And then reach out when you're in a meeting. And then the use of the emerging manager is going to be a little different for these larger consultants. Again, in many cases, it's mostly going to be a discretionary component. So think sub-advisory, getting back to that Vanguard example. And I would say, if you're new, the emerging manager programs must cover. These larger consultants must cover over time, right? Just managing expectations. It will take some time. They will tend to see a little bit more track record.
So Tim, just to intervene a little bit here. So we're talking about consultants, okay? We're talking about R&D. I just want to bring into, because if we're talking emerging managers, it could be, a private fund vehicle, could be long only, okay? On a parallel track, RIAs have discretionary capital. They're looking for new and interesting investment ideas. We've covered RIAs on numerous prior shows, which we have the recordings of those. They can make decisions in a much shorter period of time. They're looking for new and interesting investment ideas. So we've always felt that should be your primary channel to get your firm off the ground. Okay, we'll get into a little more detail, but I just want to be very clear. The consultants, the emerging manager programs, are a complement to that discretionary strategy of going to RIAs but then you do need to sprinkle all the seeds, if you will, to see who might like you or not. I do believe, though, it has to be a consistent commitment to the RAs, which we've done for 26 years. So I just want to point that out, that this is a compliment, parallel track, right? And it's hard. I'm not going to tell you it's even close to easy. It's very, very hard, but it's a rite of passage. You just can't not do it because you don't know what might happen.
Yeah, and I would say kind of along those lines with the RAs, which is a growing group within the consultant channel, is the OCIO network, right? There's a phenomenal group of consultants that have a growing OCIO, which a lot of those clients of the OCIO business are RAs, whether it's a bank or a broker-dealer platform or an RA that's tapping into a fiducian advisors, right? They're doing the investment research, creating model portfolios that drills down to the RAs. They absolutely use emerging managers. Like I said, fiducian, you have TIF, Global Endowment Management, Investure, Cornerstone Partners, Edge Hill, GCM Grosvenor, and as a few examples. And just from a consideration standpoint, they are a little bit more selective, given that they are creating discretionary mandates on behalf of other institutions or RAs. That's more of a mapping of assets. So there is a little bit of a higher threshold, but they are looking at emerging managers. And I will say, if you are a spin out of a larger firm or a pre-existing firm, that does go well with these OCIO groups. So we've seen that in the past where they'll seed or look at a newer firm if there is some prior history with that. And so again, with all these consultants and the RAs, really all channels, is market to them too early, get in front of them today, even prior to your firm's launch date in some examples, and they want to see kind of how you grow over time. So the consultant channel is obviously a phenomenal one, paired with the RAs, a lot of opportunity there.
Do you want to touch on any other platforms? I know you have some platforms.
Yeah, so within the consultant channel, a couple things that I know there's a few that do conferences, and we'll touch on a few of the emerging manager conferences, but specific to consultants, you have Makita. They do their emerging manager days twice a year. That's just their last one in October. We'll keep you posted on the ones coming up in 2024. Callan does one called Callan Connects. That's all their emerging manager programs. And then a few pensions that work with consultants that have a dedicated emerging manager program. Obviously, you have Lacers, Lacera, CalPERS, State of Maryland, some of the larger ones. And then some that are more private equity and alt specific on the emerging manager consultant side, again, is Fiducian and GCM Grosvenor. So a lot of opportunity, like I said, within the consultant channel.
Yeah, and so always the three categories of consultants, which you have dedicated emerging manager consultants, you have the large consultants that have emerging manager programs, and then you have the OCIO. Getting in business, especially on the OCIO standpoint, because that's going to give you even access to RAs. So, Tim, let's just touch on some emerging manager conferences. Yep. We'll go through. You have a few coming up, and this is all within Dakota Marketplace. We do believe these are worthwhile. Ideally, you would do it where you can go gratis, if you will, because I know these cannot be cheap. But they showing up, booking the day of meetings around this in the city that the conference is in can be very beneficial. And just being in the conference hall, if you will, whether you're a paid attendee or you're kind of just hanging out saying hello. I know we've done that quite a bit.
Absolutely.
Right? So, because these aren't cheap. But we wanted to make sure that you knew all of the upcoming emerging manager conferences, and these will be in the call notes at the end of this call. And so to wrap it up, the next 5 minutes, we just want to talk about some things we call fundraising best ideas. And these are things that we believe everybody should be doing on a consistent basis. And Tim, this is back to doing less, right?
Doing more with less.
Yeah, doing more with less. Yeah, that's the key, right? You want to be able to do more with less. And the first thing that's not on here that I want to point out, Tim, is the value of a quarterly webinar. And it's basically free. That's number one. Number two, you're able to get the emails out, get your brand out there, and you're able to share what happened during the quarter. The reason this is so significant is because you're not asking somebody for a meeting, right? Mm-hmm. You're actually just telling them exactly what you're seeing, how you performed, and then they're going to take that information. If they're a client of yours, they're going to share that with their clients. So we have an ebook that will accompany this that goes through the exact details around a quarterly webinar. we mandate it. We will not work with a firm that won't do a quarterly webinar. In fact, one of our firms, they're such rock stars, they come down to this studio and they now produce their quarterly webinar on video just like we're doing today. And it's gotten unbelievable results. So factor that into your whole marketing campaign, it's free, right? And you can use Zoom. It's very easy to do. We walk through all the different slides we believe that you should create and what you should communicate. And it's really flexing your intellectual muscle and your investment muscle.
Absolutely.
And then, Tim, why don't you talk about, there's 3 key leverage points that a salesperson has and an emerging manager. We believe, okay, this is a key takeaway, right? We talked about it before we went on the air. We talked about acting like a big firm, okay? From a sales perspective, even though you're small, you want to act big, okay? So that means you want to have clear processes in place, just like if you were a large firm. But what you're trying to do is you're trying to get leverage. And why don't you talk, first off, just the leverage that you get from using a CRM?
Yeah, absolutely. Salesforce. So using a CRM, or we use Salesforce, we're diehard Salesforce users. And a big component of this is not only an efficiency tool, but also creates sales triggers, right? Because in most cases, working at an emerging manager, you're probably wearing multiple hats, right? You might be a small fundraising team. And so when you have activity or meetings on the books and making sure that you track all of your past activity within a CRM, right? Time does fly. And next thing you know, 6 months gone by and you're like, whoa, I haven't followed up with Loyola Chicago during my last trip.
So what's we call these gold bars. What is the one thing that kind of kicks this off that you enter into the CRM? It's mandatory.
Activity.
Say it a little more specifically.
Meetings,
yes.
Calls. Yeah.
Meetings, scheduled.
Yep.
Right, because you want to be able to, why don't you just explain, as we talk about past activity reports, so once the meeting that you've scheduled gets into the CRM, it's in there forever. And then because of the robust reporting capability of these CRMs, you can
run reports, and now you can report to your boss or to your colleagues on a weekly, monthly, quarterly basis. Here are all the meetings I've done. Here's who we met with. And then ultimately that results into a pipeline. And then now you can go through with your team exactly where you stand on your strategy, your firm, across all the pools of capital that you met with clear calls to action, with current status and next steps within the pipeline. So there's no confusion or grayness around a pool of capital or an allocator on your strategy. So putting it...
Yeah, sorry, I don't know. Just the sales triggers that these reports create, where you can review the past meetings that you've completed, and then it's going to trigger all these ideas and actions. If it's in a spreadsheet, it's harder to do. If it's on a yellow pad, it's harder to do.
Yeah.
Right? Just, I promise you, get in and leverage a CRM. We do a whole bunch of webinars just on how to do it, Salesforce, the whole thing. We're very helpful to our customers on Dakota Marketplace to help them figure out how to leverage the power of a CRM.
Yeah, and we're, to that point, as a follow-up, any questions you have, if you are new to Salesforce or CRM, please reach out to us, whether it's field creation, the values. We're happy to do a call with you. We've created our own that's highly customizable. You don't need to do a lot, but there's a few, probably about 3 to 5 key fields that we would recommend for your strategy that, again, to your point, create those sales triggers.
And then the second point, I can't tell you how important this is, to create leverage as an emerging manager salesperson. So if you're out raising money, now if you're both the portfolio manager and the salesperson, it's a little bit different. I'm assuming these are going to be investment salespeople. You've been hired by a firm, you might be a partner at a firm, you got to create a sales plan. And that's really one of the keys. It creates alignment with your boss and potentially your investors, right? The most important thing for a salesperson is to be as transparent as you possibly can with executives, your boss. So you write down the plan, and the sales plan is not necessarily just a sales plan. It's to create alignment and confirm and agree on what good looks like. And I think that's the most important thing, because generally people think you should be raising money up here when the reality is kind of here. And what you need to be able to do is bring it into alignment, describing exactly where you're going to go, focus your time and energy, what success looks like, and then reporting each week progress against your plan.
Yeah. Again, we've talked about this in detail on prior shows. This is no different than an investment process. the sales plan is a sales process,
Right.
right? Tell me what you're going to do, how you're going to do it, and the results from it, right? So having that CRM helps track all this from the sales plan, so then you can report on it. But the sales plan on the front end, right? You want to make sure you and your team are on the same page of expectations and money coming in.
Yeah. So creating alignment, making sure you guys are on the same page is so critical. Now, the last thing that we're going to talk about in terms of leverage is if you're an emerging manager, new firm, up and coming, and you start getting meetings, and you're excited to get the meetings, right? And that's all great. But you need to do two things when you're closing out any investor meeting. You need to ask the two tough questions. Tim, you want to tee up the first part? I'll do the second.
You do the alts first.
Okay. So it's critical when you end a meeting, because people say to me, how do you follow up? What's your cadence after the meeting? And I said, don't follow up after the meeting. I follow up in the meeting. And what that means is once you complete the meeting, and it's at the end, you ask two questions, right? Number one, do you see this strategy fitting within your asset allocation model? If they say no, you know what the follow-up is, put them on the mailing list. If they say yes, and if you're a private fund vehicle, then you say, can you make do you think you'd be able to make the 3/31/24 final close? If they say yes, then you say, okay, what would be the next steps to better familiarize yourself with our strategy? If they say no, you know what the follow-up is. Okay, we'll wait for the next fund. After this one closes, we'll put you on the mailing list and you can join our quarterly calls. And then long only.
Mm-hmm. Very similar, right? Do you believe this is a strategy that would fit within your asset allocation? They say no, right? You know the follow-up. If they say yes, simple question of, do you foresee that you'd be doing a search within the next 9 to 12 months? Maybe. Okay. Yes or no, maybe. If yes or maybe, do you believe that we could be a candidate within that search? And if they say yes, right? DDQ, RFI, should we come back in town? Do you want to come on site, right? What is your process from a due diligence standpoint look like? How can we support you? Or no, again, you know the follow-up. So, and the reason why this is crucial is, and we've heard it from allocators, you're actually helping them do their job, right?
Yeah.
Because they don't want to get a million emails from us thinking that we had the best meeting ever, and they're like, whoa, we're not looking at this asset class right now, right? They want you to ask these questions. So then everyone, the allocator and us and fundraisers are on the same page of the next step.
Yeah, people don't like to deliver bad news, so they're going to probably not say something up front. It's absolutely vital from a leverage standpoint that you ask these two tough questions, because you don't have time to waste. And if you do it respectfully, I know they're hard. You're going to get what you want, right? You're going to get an answer. It might be, but the quick no can just be good as a yes, if you will. So ask the two tough questions. So as we close out, Tim, obviously we love working with emerging managers. We believe the different tips and techniques, all this information that we've either talked about here in our Rainmaker program, everything, there is a very clear path forward for an emerging manager on how to execute and raise those initial dollars to grow the firm. And hopefully today, as you know, we cover consultants today, we cover RAs, it's a parallel track, state pension fund, emerging manager program. So it's all out there. I will just tell you this, and we talk about it all the time, Tim. Fundraising is one side, crazy pedestrian, right? You're like, did I really sign up for being a professional meeting setter-upper? The faster you get that reality, the better off you are. Because once you get in the meeting, then you have to be this magician, right? And be this master storyteller, because you have to bring the story to life. So there is light at the end of the tunnel as it relates to, right, the fundraising, but just understand this is not easy, it's pedestrian, but if you can get those meetings, you'll end up building nice pipelines and hopefully raising money. So with that, Tim, thanks so much for joining.
Yeah, thank you.
Appreciate the insights on the consultants. And next episode, January 9th, episode 16, 1 p.m. Eastern Standard Time. Thanks so much and have a happy holiday. Hello, everyone. Just wanted to say thanks for watching. Hope you enjoyed the show. One thing that I think you do know is all of this information that we covered exists in Dakota Marketplace, our institutional investor database. Even this show that we just cut will end up in Dakota Marketplace so you can view it. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.